Hello, welcome back. So now we will be diving into the third section of mastering private equity. We now move into the most value-intensive part of private equity, the post-investment phase. This is where returns are truly earned. This is where private equity partners basically take those companies from good to great. By executing the plan, navigating risks, some external, some internal, and preparing the company for a successful exit. So anyone can make an investment ultimately, but what counts is really how you guide the company and your investment in that turn to a successful exit. So we will cover governance, management alignment, operational value creation, sustainability, and ultimately exits. So let's start off. Chapter 11. Chapter 11 is all about corporate governance. Good governance is the foundation of any post-investment value creation. Unlike public equity investors, private equity partners are active owners. They shape the strategy through board seats, reporting structures, clear accountability. Whether in majority or minority positions, private equity investors implement board governance frameworks that are fast-moving and very often extraordinarily focused. So as you can see on the slide, there is always a sense of urgency. There is a real active ownership and a clear alignment of interest between the private equity investor and management. The fiduciary duty to the LPs means that oversight isn't optional, it is absolutely essential. Now, Chapter 12. Let's talk a little bit more about those management teams, how to secure them, and most of all, how to incentivize them. So even the best private equity firms cannot execute without a great management team. Remember, they're the investors. They're not the executive level of the business. So when we talk about the art of alignment, ensuring the executive team is incentivized like an owner, that is what we mean by securing management teams. I firmly believe it's one of the secrets of private equity investing, is incentivization and clearly ensuring that management remains focused on the execution of the plan. Now, clearly there will be performance-based vesting periods. There will be very transparent management of expectations between the management team and the private equity investors. And we will also discuss the kind of psychological contract, how PE owners change the culture inside a company. All in our chapter on securing management team. Now, let's jump to Chapter 13. Chapter 13 then dives into operational value creation. This is where private equity investors roll up their sleeves, send in their operational partners to set the company up for success, especially in those critical first 100 days where the plan is being implemented. Now, some private equity firms may have, if they are larger, have their own internal resources, teams that do nothing else but work with portfolio companies to ensure that they are set up and focused on the road ahead. Others will be leveraging more external resources, be it by bringing in executive mentors, being by bringing in consultants on the outside. We introduce basically how the value creation plan is ultimately implemented. We will show how KPIs are tracked across the holding period, all with the idea of a successful exit in 4 to 6 years. Now, Chapter 14. Chapter 14 is really crucial. It focuses on responsible investing and sustainability. So ESG in private equity has really matured from a risk screening exercise about a decade and a half ago to a true value creation lever. PE firms now integrate environmental, social, and governance criteria throughout the investment life cycle, from due diligence to growth all the way to exit. Not just for compliance, but also for performance and to ensure that the asset ultimately can be sold to the best possible buyer. 2024 saw a backlash. Questions around greenwashing, impact inflation, underperformance surfaced globally. And this chapter explores how responsible investing is evolving with frameworks that are practical, transparent, and ultimately data-backed. We invited a few guests as well for some of our chapters in Mastering Private Equity. For this particular chapter, the Ford Foundation was invited, and they will touch in their contribution on the role of social justice, or the idea of social justice, and why private equity must continue to lead responsibly, not react defensively. And finally, Chapter 15, exits. In private equity, the proof isn't in the pudding, it's in the exit. Exits are how returns become real, and planning for a great exit, also called exit shaping, starts long before the actual sales process. We will walk through the major routes of exiting, from trade sale, a sale to a strategic acquirer, secondary buyouts to other private equity firms, IPOs, recapitalization, dividend recaps as we call them, and nowadays more and more also continuation funds and secondaries. We come to that in our next section. Exits are complex, often emotional, and not always straightforward. But they are what closes the loop, ultimately generates liquidity back to the LPs, and sets up the next fundraise for success. So, this concludes section 3, the operational core of private equity investing, from governance to value creation to exits, and this is where good funds become ultimately great. My next video will turn the lens outward and explore what happens at the fund level, from fundraising, portfolio construction, and ultimately reporting to the LPs. Please subscribe to my channel if you're interested in being notified, and I'll see you again soon.